Welcome to Right on the Money, the weekly talk show with interviews you can use to help you maximize your money and optimize your financial future. Before moving forward with any of the ideas discussed on the show, always consult your financial advisor, insurance professional, or tax consultant. Looking for financial help or a second opinion? We can help you in your search. And now, your host of Right on the Money, syndicated financial columnist and money-colored commentator, Steve Savant.
Well, welcome everyone to our conservative investor and savers edition of Right on the Money. And here to bring us up to speed that with all that is conservatism, our investment financial advisor, Eric Judy. Hey, Eric.
Hey, Steve. How are you doing today?
I'm well. Welcome to the show.
Thank you.
I want to point out Eric's new book, New Retirement, a Paradigm Shift. He co-wrote this with his partner, Dick. What's Dick's last name?
Dick Van Dyke.
Dick Van Dyke.
Not the actor.
Okay, not the Dick Van Dyke. And this is a really great book. It's also out on the e-version, I think. You have it?
Exactly right.
And they have a regular weekly blog every week talking about really cool things, and some of that is annuities. And we're talking about conservative investments. I mean, when I'm looking at today, the guarantee, I'm looking for guarantees. People are going to the bank. Not much there. I was on bankrate.com, Eric, and the one-year rates were like a point maybe.
Well, right now, savers, retirees, people that are trying to save money, I hate to say, there's an attack on them right now in the economic community. There's just not lots of opportunities for people to go out there and to be able to supplement their retirement income from the traditional CDs, savings accounts. Unfortunately, you just can't go there and expect to earn enough to have enough to really retire on.
Well, Eric, I mean, the Fed raised their interest rate a quarter of a point. I maybe we'll see something on the borrowing side of that equation, but I haven't seen anything on the savings account.
I don't know if this is trickle-up economics is what we're looking at, but yeah, it still hasn't impacted significantly what's out there savings side.
Well, I'm looking for things that are guaranteed, and let's just stay on the fixed rate just for a second before we get into what we want to talk about. I'm looking at 5-year rates on CDs. They're probably sitting around 2.25 or so right now. Remember, don't always check before you go out there. I'm just telling you what it is today. You need to go to bankrate.com, get a good feel of what's going on. The non-brick and mortar seem to be having the banks seem to have a bigger.
Exactly. Yeah, the online world seems to be offering better rates.
It is. So you might look at that. But I've noticed that the annuity, we're still sitting around 3 for a 5. So we're about, 50, 75 basis points up over the national average.
Exactly. If you're looking at some of the smaller deposits, you're probably 2.75 in today's world. But really, if you're $200,000 or above, there's rates out there of 3% and higher.
Okay, did I just hear you that there's a little different definition of jumbo, and CDs are usually looking for 100,000. Maybe in our language for annuities, you're saying maybe 200,000.
Exactly, and it does differ by carrier.
Okay,
but usually there are some carriers that have tiered rates. So if you have those higher dollar amounts, you do have at times an opportunity to get a little bit of a bump there.
Well, a lot of retirees, a lot of seniors are looking there. I mean, especially we this first part of this month was brutal. Dow lost 1,000 points. Right. Everybody's running for shelter, but the banks aren't paying that much. The savings accounts aren't paying that much. My money market attached to my brokerage accounts look terrible.
Well, unfortunately, it costs more to mail you their statement usually than what you're earning in interest.
Well, I have to say, I noticed that one of my mutual funds and ETFs, I noticed that the actual cost of the fund was greater than what they were paying me. I'm losing on the cash issue alone. Wow. Well, let's talk about guaranteed. We just talked about some guaranteed lockdown monies, trying at least for savers. A lot of people are now looking, okay, Steve, I'm kind of at that part where I'm ready to become a true retiree. So the boomers, about half of us now are already retiring. The other half, we're still thinking about retiring. Some of us are in between looking at a hybrid retirement. We might work through to 70 and maybe even work and bring our retirement income as long as we can do that. Talk to me about the whole guaranteed idea of guaranteed income. And let's do the first one, which is guaranteed income I cannot live.
Sure. And that's what most people are looking for. I mean, everybody likes the idea of having a pension. Everybody likes the idea of having a Social Security check. Easy for me to say. But they want those guarantees. They want something they can't outlive. And so when you're looking at an annuity, a lot of times people are looking for guaranteed income. They want that lifetime. Mm-hmm. They don't want to have something that, they get up into their 90s and all of a sudden it goes away. Mm-hmm. And as you look at the annuity options, you've got income riders, which are kind of I'll call them the new kids on the block. Mm-hmm. They've been around for probably well over 30 years now. And you're looking at, annuitization. And when people are balancing out, they're having to look at those two considerations.
Well, let's walk through that just because we're a consumer show.
Right.
Let's talk about the easy one first. Let's do annuitization. What does that mean? What is it? What's the pros and cons?
Sure, and this really dates back to, I think, the Roman era when you're talking about annuities. And it's really what you're doing is you're taking your savings, your lump sum, and you're giving it to the insurance company in exchange for a stream of payments. Now, you get to dictate kind of what that stream of payments is. It can be lifetime. It can be 5 years, 10 years, 7, whatever that number needs to be, you can set that. You can also set lifetime with minimum guarantees. But what you're looking at there is giving up control. You're really giving the insurance company that lump sum in exchange for that guaranteed stream. And that's really what annuitization is.
Well, I think there's some people that I'm kind of maybe on some of mine, not all of it, but some of my money I might want to give up control because I like the idea of having guaranteed income I can't outlive. So if I turn out to be the Guinness Book of World Records Gene Calment, who lived 122 years, 164 days, I know they're going to make the payment. So I don't know if I want to do that with all my, but I'd like to build a floor of retirement with that. Now, that's annuitization. And once I'm done, it's that I can't take that back. You have buyer's remorse, that's an issue, right?
That's exactly right. Now, technically, I guess you could sell it on the secondary market, but you're going to get pennies on the dollar. So not recommended that anybody go into an annuity planning on annuitizing, be planning on trying to liquidate. Now, there are some carriers out there that have the ability to have some sort of commutation to let you get out of these contracts, and that's relatively new in the industry. There's not a whole lot of those carriers out there. So if there is some kind of emergency or something you're thinking that's a safety valve you'd like to have, that's something that's a carrier-specific thing that you're going to want to investigate more as you're really seriously looking at that.
And I just have to recommend, really, you should have other liquid assets, really. There should be something in your reserve account before we start looking at unbundling or unwinding an annuity that we've annuitized.
And that's exactly it. You need to have liquidity out there because life gets in the way.
Well, what about the difference? That's annuitization. Everybody kind of said, I give a lump sum,
right.
I'm making the payments, it's going forever, it's guaranteed. I'm pretty in love with that.
And the nice thing about that is, and I'll tell you with annuities, that's typically going to be your best payment option. If you're looking for your highest payment, typically it's going to come from annuitization, especially when you're comparing it to the other options that we're probably going to consider here, and that's the income rider.
We'll talk about that because now, I thought, wouldn't it be the same actual payments? But no.
Well, with an income rider, all right, here's the deal. The reason you would elect to have an income rider tied to an annuity is to get that lifetime income guarantee. You don't get some of the other sub-guarantees, the 10-year certain, and those pieces typically associated with that. But with that income rider, you're going to guarantee lifetime income. But here's the catch. You get to still maintain what I like to term majority control. People will say, well, why majority control? Well, most annuities have a surrender schedule, surrender period. Let's just assume first few years it's a 10% surrender. You still have control over 90% of your dollars, even day one, on that type of annuity. So you're using the income rider to get the lifetime income guarantees, but yet you still have the ability, if you had to go in there, get those dollars and take them out, you could. So that's what I term kind of majority control on the income rider, but still having the ability to get life.
Which is a little different from the annuitization because that's when we're giving up control.
Right.
Okay, so when I'm doing income riders and I have a little bit more control now, if that's your psychological profile, I'm looking at income riders, and they have two issues that I want to cover off right up front, since we're going to be the whole day talking about a lot of these guaranteed issues, which is really it seems like the appetite right now for most conservative investors and savers. They're just looking for someplace to go.
Well, they're looking for someplace to go, and they don't want to. Annuitization, unfortunately, for some people, that loss of control just they can't stand it. And so this is why it's become a very popular option to say, give me the guarantees, but yet still leave me the control.
Okay, well, in income riders now, do I have to actually pay a price to attach a rider?
On the vast majority of carriers, yes, you're going to pay some sort of fee. And typically we're seeing on most of the fixed products out there ranges of at least 50 basis points or half a percentage point all the way up to a point and a half.
Point and a half. Well, that seems a little stiff. But there are some that are actually embedded in their contracts for free, right?
Yes, there are free options out there.
Okay.
So if you're looking for a free option, usually smaller benefits or some sort of stacked benefit comes in association with a free option.
You need this has to be shopped.
Oh, yeah.
And this isn't for self, this isn't one of those do-it-yourself issues either. Remember, if you're listening to our show on radio, iTunes, or a podcast, you can view the video version online at rightonthemoneyshow.com and request information on this segment. In our second segment, we're going to be talking about the hybrid annuity with Eric Judy. We'll be right back, right after this.
For more information on this week's money topics, just go to our website at www.rightonthemoneyshow.com and follow Steve's daily postings on Facebook, Twitter, and LinkedIn. When it comes to retirement, money management, small business, insurance coverage, college funding, or budgeting, we have the interviews you can use.